All right, let's talk about something absolutely crucial in the world of trading: Forex brokers. These are the gatekeepers, the middlemen, to the biggest market on the entire planet. But how do they actually work behind the scenes? Well, we're about to pull back the curtain. Let's get into it.
It's a question that sounds simple, right? When you hit that buy or sell button, where does that order actually go? You're not just sending it out into space. Someone or something has to take the other side of your bet. And figuring out who that is, well, that changes absolutely everything.
So the easiest way to think about a Forex broker is to picture them as your currency travel agent. Simple as that. You want to trade your US dollars for Japanese yen? You can't just show up to the global market yourself. You need someone to get you a ticket, to give you access. And that's the broker. But, and this is key, not all travel agents operate the same way.
And that brings us to the first massive fork in the road. You see, brokers are basically split into two completely different universes, and it all boils down to one question. Do they handle your trade themselves, or do they pass it on to someone else?
Here it is. This is the big divide. On one side, you have dealing desk brokers. Think of them like a travel agency that owns its own airline. They set the prices, they fly the planes, they take the other side of your trade. On the other side, you've got no dealing desk brokers. They're more like a search engine, They scan all the airlines out there to find you the best possible price on the open market. Understanding this one difference is honestly the most important part.
So let's dive into that first universe. Let's pop the hood and see what it really means when a broker runs a dealing desk. Okay, so the most common type of dealing desk broker is called a market maker. And the name really says it all. They don't just find a market for you, they are the market for you. They create their own little internal pool of buyers and sellers, they set their own prices, and they guarantee that if you want to sell, they'll be there to buy. And if you want to buy, they'll be there to sell.
Now, to be fair, this model has some real perks, especially if you're just starting out. The spreads, the difference between the buy and sell price, are often fixed, which makes things predictable. The trading platforms are usually super simple and user-friendly, and you almost never pay a separate commission because the broker makes their money from that built-in spread. But, and this is a big but, there is a catch. It's this potential conflict of interest. Because the broker is taking the other side of your trade, it means that if you lose money, they can potentially gain it. Now, that doesn't mean they're all villains trying to cheat you, but that conflict is baked right into the business model itself. You might also run into requotes, where the price changes right as you click the button, which can be frustrating in a fast market. Okay, so that's one whole side of the story. Now let's jump over and explore that other universe. What happens when a broker decides, you know what, I'm not going to be the one on the other side of my client's trade? What happens then?
This is the entire philosophy of a node dealing desk broker. They see themselves as a bridge, not a wall. Their job is to connect you directly to the huge interbank market. That's the network where all the big banks and institutions trade with each other. They're not setting the price. They're just giving you a front row seat to the best prices available out there.
One of the most popular ways they do this is with a model called STP, which stands for straight-through processing, and it is incredibly fast. You place your order and boom, the broker system automatically shoots it over to one of their big liquidity providers, we're talking major international banks here, and they fill your order instantly. It's all electronic, with no one at a desk getting in the way. Now, what if you could take that idea and kick it up another notch? Well, that's where the ECN model comes in. An electronic communication network isn't just a bridge, it's a full-on, transparent marketplace. Your order goes into this live, anonymous network where it gets to mix and match directly with orders from banks, hedge funds, you name it, even other traders just like you. You get to see everything.
Okay, now check this out, because this slide shows you the real magic of how an ECN works. You've got all these different players in the game. Bank A is willing to buy at 1.1001, but look, Trader X is willing to pay a little more, at 1.1002. Meanwhile, Bank B is willing to sell at 1.1002. The ECN system sees all this and automatically matches the highest buyer with the lowest seller. And just like that, you get the best possible market price, and in this case, the spread is literally zero. That's powerful stuff.
So, we've toured both broker universes. We've met the market makers, the STP brokers, and the ECN brokers. Now we get to the most important part. How on earth do you choose the right partner for your own trading journey? This slide right here, this is your ultimate cheat sheet. If you take away one thing, let it be this. Your market maker makes money on the spread, and yes, potentially when clients lose. That's the conflict of interest, and they're usually best for beginners who just want simplicity. Your STP broker makes money by adding a tiny markup to the spread, but there's no conflict. And then you have your ECN broker. They charge a small flat commission for each trade, but in return, you get that pure, direct market access, making them perfect for more advanced traders who need the tightest spreads possible.
You know, this quote really just hits the nail on the head. Choosing a broker isn't just a small technical detail, it's a fundamental decision. It determines whether you're trading in a closed system or an open marketplace. It literally defines the rules of the game you're about to play.
So the final question is really for you to answer. Now that you've seen how it all works under the hood, which of these models, the all-in-one market maker, the direct STP bridge, or the totally open ECN marketplace, which one feels right for you and your own trading philosophy? Figuring that out is your next step. Thanks so much for tuning in.